What if I told you there's a dividend investment so powerful that once built, it could deposit $3,000 into your bank account every single month? Automatically? Without you ever needing to sell a single share? This isn't some get-rich-quick scheme or high-risk strategy. It's a methodical approach using one of the most respected dividend ETFs on the market, one that has been quietly making everyday investors financially independent for years. Imagine waking up on the first of every month, checking your account, and seeing another $3,000 deposited. Rain or shine, bull market or bear market. That's $36,000 annually in passive income that continues flowing whether you're traveling the world, spending time with family, or simply enjoying the freedom of not having to work for your money anymore. Today, I'm going to reveal exactly how much you need to invest in the Schwab U.S. Dividend Equity ETF, known as SCHD, to reach this $3,000 monthly dividend goal. I'll show you not just for people with large sums to invest right now, but also for those starting with modest monthly contributions. By the end of this video, you'll know your exact freedom number, the specific dollar amount you need to reach your dividend income goals, whether you're planning to retire next year or decades from now. Let's unlock the power of SCHD and transform your retirement future, starting right now. Smash that like button and subscribe to the channel if you want more dividend strategies that could change your financial future. It takes just 1 second, but helps the channel grow. Meet James. At 47, he's doing everything right, according to conventional wisdom. He's been diligently saving in his 401k for decades, has a decent emergency fund, and even paid off his mortgage early. But lately he's been waking up at 3 a.m. with a gnawing concern that keeps him staring at the ceiling. Here's the problem. Despite his responsible approach, James is facing the same retirement math that millions of Americans are confronting. His financial advisor tells him he needs about 80% of his pre-retirement income to maintain his lifestyle, which amounts to roughly $6,000 per month. Social Security might cover half that, if he's lucky, and waits until full retirement age. That leaves a $3,000 monthly gap. And traditional solutions just aren't cutting it. Social Security benefits are barely keeping pace with inflation, with the average monthly benefit hovering around $1,900 in 2025. For many, that's barely enough to cover housing and health care. Treasury bonds and CDs are paying better than a few years ago, but still well below what most retirees need to generate meaningful income, and they offer zero growth potential. Traditional retirement accounts force you to gradually sell your investments, creating anxiety about market timing and the terrifying prospect of outliving your money. "I don't want to be 85 and watching my account balance shrink every month," James told me. "I want predictable income that grows over time and lets me sleep at night." James needs $3,000 in monthly passive income that's reliable enough to plan his life around growing faster than inflation, diversified to reduce company-specific risk, simple to manage without becoming a full-time stock analyst, based on quality investments, not chasing unsustainable high yields. This is where SCHD enters the picture as a potential cornerstone solution to James's retirement income puzzle, and possibly yours too. The Schwab U.S. Dividend Equity ETF, ticker symbol SCHD, isn't just another dividend fund. It's a carefully engineered income machine designed to provide growing dividend payments from America's most financially stable companies. Let me pull back the curtain and show you exactly what makes SCHD special. According to the latest data from February 2025, SCHD stands apart with these remarkable metrics. An expense ratio of just 0.06%, meaning for every $10,000 you invest, you pay only $6 annually in fees. This makes it one of the most cost-efficient dividend ETFs on the market. While other funds silently drain your returns with fees 10 to 15 times higher, SCHD keeps more money working for you. Approximately $69.2 billion in assets under management. This isn't some experimental fund. That massive scale means extraordinary liquidity, tight bid-ask spreads, and the staying power that comes with being one of the most widely held ETFs in existence. A portfolio of 103 holdings across multiple sectors. providing you built-in diversification that would be impossible to replicate as an individual investor without millions to deploy. A current dividend yield of 3.5% as of early 2025, which means every $100,000 invested generates about $3,500 in annual dividend income to start. But that's just the beginning of the story. Most impressively, SCHD has delivered average dividend growth of 12.2% over the past year. This is the hidden accelerator that most dividend investors overlook. Your income stream isn't static, it's designed to grow substantially over time. While other investors chase dangerous ultra-high-yield stocks that often cut their dividends later, SCHD follows a different philosophy. It selects companies with strong balance sheets, consistent cash flows, and proven commitments to rewarding shareholders through steadily increasing dividends. This isn't just a collection of random dividend stocks. SCHD tracks the Dow Jones U.S. Dividend 100 Index, which uses a sophisticated screening process focusing on companies with at least 10 years of dividend payments, strong financial fundamentals, and relative value. In other words, SCHD gives you professional-grade portfolio management and dividend growth potential in a single, easy-to-buy investment, exactly what James needs to build his $3,000 monthly income stream. SCHD Holdings. Let's look under the hood at exactly what you're buying when you invest in SCHD. Unlike some dividend ETFs that chase yield at any cost, SCHD emphasizes quality companies with sustainable dividend policies. As of January 2025, here are the top 10 holdings that form the backbone of this ETF. AbbVie Inc. ABBV, 4.7%. A pharmaceutical powerhouse with 50-plus consecutive years of dividend increases, even through multiple economic cycles. Coca-Cola Co. KO, 4.6%. Warren Buffett's favorite holding has paid and increased dividends for 63 straight years. Amgen Inc. AMGN, 4.5%. This biotech leader generates billions in free cash flow from its portfolio of life-changing medications. Cisco Systems, CSCO, 4.3%. The internet infrastructure giant that has transformed from a growth stock to a dividend powerhouse. Pfizer Inc. PFE, 4.3%. Beyond COVID vaccines, Pfizer maintains a diverse portfolio of medications, generating consistent cash flows. Texas Instruments, TXN, 4.1%. This semiconductor manufacturer has increased its dividend for 19 consecutive years at a 17% compound annual growth rate. Verizon Communications, VZ, 4.1%. With its substantial wireless infrastructure, Verizon generates subscription-based revenue that supports its healthy dividend. Chevron Corp., CVX, 4.06%. One of the world's largest integrated energy companies with 36 consecutive years of dividend increases. Bristol Myers Squibb, BMY, 4.04%. This pharmaceutical giant maintains a robust pipeline of medications with strong patent protection. PepsiCo Inc., PEP, 3.9%. Beyond beverages, Pepsi's snack divisions provide diversified revenue streams supporting dividend growth. Notice what these companies have in common. They're established market leaders with durable competitive advantages. These aren't speculative startups hoping for profitability someday. They're businesses generating billions in free cash flow annually, with significant portions returned to shareholders through dividends. SCHD's sector allocation provides another layer of strategic diversification. Financials, 17.7%. Healthcare, 17.6%. Consumer staples, 14.8%. Industrials, 12.5%. Energy, 11.8%. Consumer discretionary, 9.1%. Information technology, 8.9%. Communication services, 4.7%. Materials, 2.7%. This intelligent sector balance means you're not overly exposed to any single industry's risks. When financial stocks struggle, healthcare might thrive. When energy faces headwinds, consumer staples often remain steady. It's like having multiple income streams within a single investment. The beauty of SCHD is that you don't need to become an expert on 103 different companies. The fund's methodology automatically rebalances, removing companies that cut dividends and maintaining strict quality standards, all while you collect those growing dividend payments. Historical performance of SCHD. While past performance can't guarantee future results, SCHD's track record tells a compelling story about its potential for building retirement income. Let's examine the numbers that show why SCHD has become a cornerstone for dividend investors planning their financial independence. As of February 2025, SCHD has delivered a 1-year total return of plus 13%, a 3-year annualized return of approximately plus 6.7%, a 5-year annualized return of approximately plus 12.5%, a 10-year annualized return of plus 11.6%, and since its inception in October 2011, an impressive plus 12.9% annualized return. These returns are particularly impressive when you consider they've been achieved through multiple market cycles, including the pandemic crash, inflation surges, and interest rate hikes. SCHD has demonstrated resilience when it matters most, but for retirement income planning, what truly separates SCHD from other investments is its remarkable dividend growth trajectory. The fund has delivered 1-year dividend growth of plus 12.2%, 3-year dividend growth of approximately plus 9% to plus 10% per year, 5-year dividend growth of plus 12% to plus 13% per year, and 10-year dividend growth of plus 11% to plus 12% annually. Let these numbers sink in for a moment. While many retirees settle for fixed income investments with stagnant payment streams, SCHD has been increasing its payouts at an average rate of over 10% annually for the past decade. To put this in perspective, a dividend growing at 10% per year doubles approximately every 7 years. This means a $3,000 monthly income stream could potentially grow to $6,000 monthly within a decade, and $12,000 monthly in about 17 years, all without you needing to invest an additional dollar. This is precisely why SCHD stands out as a potential solution for James's retirement income needs. It's not just about the initial yield, it's about establishing an income stream that grows faster than inflation, potentially allowing you to increase your lifestyle over time rather than being forced to cut back as traditional retirees often must. These dividend increases aren't random. They're fueled by the underlying companies growing their earnings and consistently raising their own dividend payments to shareholders. By focusing on companies with strong dividend growth histories, SCHD has created a portfolio specifically engineered to generate increasing income over time. The SCHD Snowball Effect. This is where the magic of SCHD truly comes to life. Let me show you how a seemingly modest investment can transform into a significant income stream through what I call the SCHD Snowball Effect. Imagine James invests $10,000 in SCHD today at the current yield of 3.5%. In the first year, this generates about $350 in dividends. Not life-changing money, certainly not enough to fund a retirement, but this is just the beginning of the story. Here's where the snowball starts rolling. James sets up a DRIP, dividend reinvestment plan, so that every dividend payment automatically purchases more SCHD shares. Meanwhile, the companies within SCHD continue growing their businesses and increasing their dividend payments at the historical rate of around 11 to 12% per year. Fast forward 10 years. Based on SCHD's historical patterns, that initial $10,000 investment could be generating closer to $950 in annual dividends. The dividend income has nearly tripled while James has done absolutely nothing except remain patient and let the snowball effect work. But the real transformation happens over longer periods. In 20 years, that same initial $10,000 investment in SCHD could potentially be paying James around $2,800 in annual dividends, nearly tripling his initial investment in income alone. Think about that. A one-time $10,000 investment potentially generating over $230 monthly in perpetual income. This powerful compounding occurs for three simultaneous reasons. First, Dividend reinvestment means James is acquiring more shares every quarter without lifting a finger. Second, the companies within SCHD are increasing their dividend payments yearly, meaning each share generates more income over time. Third, as James accumulates more shares through reinvestment, each dividend increase applies to a larger number of shares, creating a geometric growth effect rather than a linear one. This is the fundamental difference between dividend growth investing and strategies focused solely on current yield or share price appreciation. Rather than hoping for favorable market conditions when it's time to sell shares, James is building a growing income stream that becomes increasingly independent of market fluctuations. The SCHD Snowball Effect demonstrates why many investors prioritize dividend growth over current yield. Chasing today's highest yields often leads to stagnant or declining income over time, while patiently building a position in quality dividend growers like SCHD can create substantially more income in the long run. SCHD versus SPY comparison. Many investors wonder how SCHD stacks up against SPY, the popular ETF that tracks the S&P 500 index. While both are excellent investment vehicles, they serve different purposes, particularly for those approaching or in retirement. Let's break down the key differences to help you understand which might be better suited for your retirement income goals. First, the yield differential is substantial. SCHD currently offers a yield of approximately 3.5%, compared to SPY's more modest 1.5% to 1.7%. This means SCHD generates more than twice the immediate income per dollar invested, a critical factor when you're counting on your portfolio to provide monthly cash flow. In terms of dividend growth, SCHD has demonstrated more consistent dividend increases over time. While SPY's dividend growth can be impressive during economic expansions, it tends to be more volatile and susceptible to cuts during market downturns. SCHD's focus on companies with strong dividend histories provides more reliability for income-dependent investors. Risk metrics also favor SCHD for retirement portfolios. SCHD has historically shown lower volatility with a standard deviation around 13% to 14%, compared to SPY's 15% plus. This means your portfolio value tends to fluctuate less dramatically with SCHD, an important consideration for retirees who may become anxious during market corrections. Additionally, SCHD maintains a beta of approximately 0.88 relative to the S&P 500. In practical terms, this means when the broader market drops 10%, SCHD has historically fallen less, around 8.8% on average. This reduced volatility becomes increasingly valuable during retirement when sequence of returns risk, the danger of major market drops early in retirement, becomes a primary concern. That said, SPY may offer advantages in certain market environments, particularly during strong growth phases dominated by technology stocks. SPY typically has greater exposure to high-growth sectors that pay minimal dividends but may deliver superior price appreciation. For James, who needs reliable monthly income in retirement, SCHD's higher yield, more consistent dividend growth, and lower volatility align perfectly with his goals. However, many successful retirement portfolios include both, using SCHD as the foundation for income while maintaining some exposure to SPY for additional growth potential. This balanced approach provides both the income needed for today and the growth required to maintain purchasing power over a potentially decades-long retirement. 3 strategic approaches. Now let's talk about how to incorporate SCHD into your retirement investment strategy. Depending on your time horizon, risk tolerance, and income needs, there are several effective approaches to consider. Strategy 1. The all-in approach. Some investors might consider an SCHD-only portfolio for maximum simplicity and income focus. While this offers streamlined management and solid income potential, I generally recommend some diversification to protect against sector-specific risks. However, if you're committed to this path for its simplicity, here's what you need to know. At today's yield of 3.5%, you'd need approximately $1,025,000 invested in SCHD to generate $3,000 monthly, $36,000 annually in dividend income. This approach provides a single-ticket solution that requires minimal ongoing management while delivering growing income over time. Strategy 2. The core and satellite approach. A more balanced strategy uses SCHD as your core holding, 50 to 60% of your portfolio, while complementing it with other carefully selected investments, 20 to 30% in a growth-oriented ETF like VUG for additional capital appreciation, 10 to 20% in bond ETFs like BND for stability during market volatility, 5 to 10% in REITs like VNQ for additional income diversification. With this approach, assuming a blended yield of approximately 3.3%, you'd need about $1,090,000 to generate $3,000 monthly. While this requires a slightly larger investment, it provides better diversification and potentially more stable returns across different market environments. Strategy 3. The Dividend Growth Ladder. This strategy takes advantage of SCHD's dividend growth potential while adding immediate income through higher-yielding investments. 40% in SCHD for long-term dividend growth, 30% in higher-yielding dividend ETFs yielding 4 to 5% like SPYD or VYM, 20% in fixed income investments for stability, 10% in covered call ETFs offering 7 to 9% yields like JEPI or QYLD. With this blended approach targeting a 4% initial yield, you'd need about $900,000 to generate $3,000 monthly. This strategy provides higher initial income while still maintaining exposure to SCHD's dividend growth for long-term inflation protection. The Accumulation Phase Strategy. For those still in the accumulation phase, like James, who has 15 years until retirement, the strategy would be different. I recommend maximizing contributions to tax-advantaged accounts like 401ks and IRAs, setting up automatic investments in SCHD at regular intervals, reinvesting all dividends through a DRIP reinvestment plan, gradually increasing SCHD allocation as retirement approaches. This disciplined approach allows James to take full advantage of dollar-cost averaging and the compounding effect of dividend growth over time. By consistently investing and reinvesting dividends, he can build a substantial SCHD position that will eventually provide his target $3,000 monthly income. Each of these strategies offers a pathway to achieving your retirement income goals with SCHD as a cornerstone investment. The right approach depends on your specific circumstances, time horizon, and risk tolerance. SCHD Retirement Calculator. Now let's break down the numbers using what I call the SCHD Calculator approach. We'll look at exactly how much you need to invest to reach your $3,000 monthly income goal based on different time horizons. Scenario 1. Immediate income needs. If you need income right now, here's precisely how much you'd need invested in SCHD to generate various monthly income amounts, assuming the current 3.5% yield. For $1,000 monthly, $12,000 annually, you'd need $342,857 invested in SCHD today. For $2,000 monthly, $24,000 annually, you'd need $685,714 invested in SCHD today. For our target of $3,000 monthly, $36,000 annually, you'd need $1,028,571 invested in SCHD today. And for those seeking $5,000 monthly, $60,000 annually, you'd need $1,714,286 invested in SCHD today. These figures represent your freedom numbers if you need income immediately. But what if you have time on your side? Scenario 2. 10-year time horizon. This is where SCHD's dividend growth really starts working in your favor. If you have 10 years before you need the income, the numbers change dramatically. Starting with $100,000 invested in SCHD today and reinvesting all dividends, your expected portfolio value in 10 years would be approximately $283,300, based on 10.9% annual return, including reinvested dividends. Your expected annual dividend income in 10 years would be around $10,915, based on historical dividend growth patterns. This provides monthly income of about $910. Starting with $500,000 invested in SCHD today, your expected portfolio value in 10 years would grow to approximately $1,416,500. Your expected annual dividend income in 10 years would be around $54,575. This provides monthly income of about $4,550, well exceeding our $3,000 monthly target scenario 3. 20-year time horizon. This is where the power of compounding really shines. With a 20-year runway, the amount needed to reach our target drops significantly. Starting with $100,000 invested in SCHD today, your expected portfolio value in 20 years would grow to approximately $803,300. Your expected annual dividend income in 20 years would be around $37,755. This provides monthly income of about $3,150. Did you catch that? With a 20-year time horizon, just $100,000 invested in SCHD today could potentially generate over $3,000 in monthly income. And if you start with $200,000 invested in SCHD today, your expected portfolio value in 20 years would grow to approximately $1,606,600. Your expected annual dividend income in 20 years would be around $75,500. This provides monthly income of about $6,300. These projections demonstrate the incredible advantage of starting early. The longer your time horizon, the less capital you need to invest today to reach your income goals. This is why I constantly emphasize to younger investors that time in the market is their greatest asset. Even modest investments can grow into substantial income streams given enough time and consistent dividend growth. The $1 million SCHD portfolio. Many investors aspire to build a $1 million portfolio, often seen as the gold standard for retirement readiness. Let's explore what a $1 million investment in SCHD might look like over time, and how it transforms into an increasingly powerful income-generating machine. Starting with an initial investment of $1 million in SCHD, here's how the numbers potentially unfold. Year 1. Portfolio value. Approximately $1,035,000, assuming 3.5% price appreciation. Annual dividend income. $35,000 monthly income. $2,917. Notice that in just the first year, you're already close to our $3,000 monthly income target. But the real story develops as time passes. Year 10. Portfolio value. Approximately $2,833,000 annual dividend income. $109,150 monthly income. $9,096. By year 10, your monthly dividend income has more than tripled to over $9,000 per month. This isn't just keeping pace with inflation. It's allowing for a substantial lifestyle upgrade or the ability to reinvest part of your dividends for even greater future income. Year 20. Portfolio value. Approximately $8,033,000 annual dividend income. $377,550. Monthly income. $31,463. 2 decades in, the transformation is remarkable. Your monthly dividend income has grown to over $31,000, more than 10 times your initial monthly income. This demonstrates how SCHD can potentially turn a retirement portfolio into a multi-generational wealth-building machine. Year 30. Portfolio value. Approximately $22,770,000 annual dividend income. $1,288,000 monthly income. $107,333. After 30 years, the numbers become truly extraordinary. A monthly income exceeding $107,000 represents financial freedom at a level most people never achieve. While these projections use SCHD's historical returns and dividend growth rates, it's important to remember that past performance doesn't guarantee future results. Markets fluctuate, companies change, and economic conditions vary. Nevertheless, these calculations illustrate the potential of a long-term SCHD investment strategy built on quality dividend-growing companies. What's particularly powerful about this approach is that it doesn't require selling shares to generate income. The dividends flow regardless of market conditions, providing psychological comfort during inevitable market downturns. Your income remains stable and growing even when share prices temporarily decline. For those planning multi-decade retirements, this growing income stream provides a powerful hedge against inflation, potentially allowing for an improving rather than declining standard of living throughout retirement. Dollar cost averaging into SCHD. Not everyone has $100,000 or $1 million to invest at once. Let's look at a more realistic approach for many investors through dollar cost averaging, consistently investing smaller amounts over time. In this example, let's say James invests $1,000 monthly into SCHD and religiously reinvests all dividends. Here's how this approach could potentially grow over time. After 10 years, total invested, $120,000. Expected portfolio value, approximately $190,000. Annual dividend income, $7,315. Monthly income, $610. While $610 monthly isn't enough to retire on yet, James has built a solid foundation by investing just $1,000 monthly for a decade. His portfolio is now generating over 7% of his target income, and he's just getting started. After 20 years, total invested, $240,000. Expected portfolio value, approximately $632,000. Annual dividend income, $29,700. Monthly income, $2,475. After 2 decades, James has invested a total of $240,000. But his consistent approach has grown this to a portfolio worth over $632,000. More importantly, he's now generating $2,475 in monthly dividend income, 82.5% of his $3,000 monthly target. With just a few more years of contributions or slightly higher monthly investments, he could reach his full income goal. After 30 years, total invested, $360,000. Expected portfolio value, approximately $1,860,000. Annual dividend income, $105,300. Monthly income, $8,775. After 3 decades, the power of consistency becomes undeniable. James has invested a total of $360,000, far less than the immediate lump sum requirements we discussed earlier. Yet his portfolio has grown to $1.86 million, generating over $8,775 in monthly dividend income, nearly 3 times his original target. This approach makes the journey to financial independence far more accessible for the average investor. By consistently investing in SCHD and harnessing the power of dividend growth and compounding, even modest monthly investments can grow into significant income streams. What's particularly valuable about dollar cost averaging is that it removes the stress of trying to time the market. When SCHD prices drop, James' $1,000 buys more shares, potentially enhancing his long-term returns. This systematic approach keeps emotions out of the equation, allowing the math of compounding to work its magic over time. For those who feel intimidated by the large lump sums mentioned earlier, remember that James achieves remarkable results by simply investing $33 per day. This demonstrates that financial independence through dividend investing isn't reserved for the already wealthy. It's accessible to anyone with discipline, patience, and a commitment to consistent investing. So there you have it, the SCHD Retirement Calculator broken down to show you exactly how much you need to invest to generate your desired income in retirement. Let's summarize the key insights we've discovered today. SCHD offers a compelling combination of current yield, growth potential, and stability that few other investments can match. Its focus on quality dividend-growing companies provides both immediate income and increasing payments over time. The power of SCHD's dividend growth compounds dramatically over time, transforming even modest investments into substantial income streams. This is why dividend growth, not just current yield, should be a primary consideration for income investors. Time is your greatest ally in this strategy. The earlier you start, the less you need to invest to reach your income goals. A 25-year-old investing $500 monthly may achieve greater retirement income than someone starting at 45 with $2,000 monthly. Consistent contributions and dividend reinvestment accelerate your progress exponentially. By automatically reinvesting dividends during your accumulation phase, you harness the full power of compounding. Whether you're just beginning your investment journey with monthly contributions of $100, fine-tuning your retirement approach with a larger portfolio, or already enjoying the fruits of dividend income in retirement, SCHD deserves serious consideration as a cornerstone holding for income-focused investors. Now I'd love to hear from you. Are you currently investing in SCHD for retirement? What's your target monthly dividend income? Have you tried any of the strategies we discussed today? Let me know in the comments below. I personally read and respond to as many comments as possible, and your questions often inspire future videos. If you found this analysis helpful, please hit that like button. It really helps with the YouTube algorithm and allows more people to discover these strategies. And if you want more content on dividend investing and retirement planning, subscribe to the channel and hit the notification bell so you don't miss any future videos. This video is for educational and informational purposes only. Investment performance shown is based on historical data and projections. Past performance doesn't guarantee future results. Always conduct your own research and consult with a qualified financial advisor before making any investment decisions. Investments carry risk, and you may lose money.